Hello everyone, hope we're all doing well. So in today's video, I'm going to be speaking about something that we have done a tutorial on, but of course that was a tutorial and we're doing some bit of replaying, but now we need to implement what we have studied in the actual markets in the real-time analysis. We analyze together and we see how price plays out. So what is that? That is how to identify high probability highs and lows where you can focus on as area of interest to take your trades. Right. So, and also before we get into the video, speaking about reminding ourselves, I've always told you that there are three types of analysis. One is technical analysis. The second one is fundamental analysis. And the third one, which is least used, is sentimental analysis. But talking about technical, is this one that we do. And fundamental analysis is whereby you're involving news and what is coming out of things that affect other countries' economy. So what do I use? I use a website called Fastbull. Now this website is very, very well equipped. They have a section where you can get news. Now, by news, I mean that you're going to be looking at different things, stocks, forex, all the things that you're trading, indices, stock indices, and the rest, right? Then also they have what we call AI signals. Now the AI signals, these ones you can after doing your analysis, you can compare with yours and see if you're having the same outcome. If not, then you can let it pass by. Then also they have analysis column whereby you'll be reading analysis from other people. It's good as a trader to interact with others and so many others. Also, you can compare brokers. The website is very, very wide. That it provides a wide range of things. Then also personally, the part I like is the part of institutional data. Like I promised, I didn't promise, but we shall do a video on it once we get time. I loved there's a part down there which I like using, and also where I get the interest rate policies, right? So make sure you check out Fastbull always before you take trades, and also if you use a mobile phone or you're a mobile person, you're always up and down. You can download the application so it's always on your phone. So let's go to the video. Now, this is Euro USD that I'm going to be using. Let me just close this. That I'm going to be using. Now, if you look at my chart, it's very easy for us to say that this was a high, this was a low, this was a high, this was a low, right? But in actual sense, very few people can identify that with ease because there are very many highs that happened here along the way. Now, we want to see how exactly you can determine that, no, it's not time for me to use this high. It's time for me to use this high. It's time for me to use this previous higher high, which is now a support. How do you determine all that, right? And also, it's easier when when I'm teaching you in a tutorial that this is a high, low, higher high, higher low, higher high, higher low, or this is a low, lower high, lower low, lower high. It's very easy, right? Even when you're reading notes in a textbook or you're reading something off the internet, it's very easy. But I want us to do it practically. I'm not going to replay because we're going to do analysis together. And I've spoken about this Euro USD before. So you'll see how exactly I came up with this analysis. You can see where the touch here, where the touch here. So here I spoke about how the market probably is going to touch this point before starting to reject. You can check the previous video for the guys who did not watch it. So let me just clear everything so that we can mark our charts together and you see exactly, because it's on my watch list. Let's see why I've put it on my watch list and which exact area am I looking at. And also maybe you can compare on your side and you can be able to utilize it, right? So I've just cleared my chart. As usual, I normally start from the monthly time frame. Why do I use the monthly time frame? Because it gives me direction. Just like I always remind you guys, please, if you feel the monthly time frame is so big for you, choose different time frames. We have already done a video on how to select time frames, right? So you can clearly see that there's this level that the market has been playing around, but not properly testing. So even here, we left an improperly test. So there's a possibility the market is now coming back down to test it. And why do I say that? It's because also we had the high here, which the market failed to break above. The market reached here, it was rejected, came back, it even attempted to break it, it was rejected. It again came back, it is now being rejected, meaning it's a very strong level. So, right? So that's why I have marked it. So our direction, we see that we have seen that we're coming downwards. Let's check if weekly agrees. Now, weekly is where I love getting my structure from. So what I normally like doing also as I'm going down to the lower time frames, as I go to the more lower time frames, I like adjusting my slab so that they are not so big. So you can see I've adjusted this slab. Now, also, if you can observe, we did have here a market reaching it was rejected. We made a false breakout, broke down, Now it's like we are testing that false breakout. I've spoken about false breakout before as a method of entry. It's very, very nice for me in the entry time frame, and I love it so much. I even made a whole video about it, how I use it to take entries. It's my favorite way of entering trades. You can just look up that video so that you can utilize it, right? So you can see this is where I'm expecting the market to come back down to this level here, right? So, but we're not sure. We're not market makers. We don't know if to reach there. And also the market then just falls straight. You can see it came down, it went up, it came down. Now there's a possibility it's even going back up. It may even decide to continue higher, but we want to see which level exactly am I watching out for by marking the levels. You can clearly see I so far have two levels on my weekly chart, right? From monthly, weekly. Now the weekly structure is agreeing. Now I want you guys to observe something here. This is the area we're going to focus on so much, this area here, right? Actually, let me just clear this so that we can just, please guys, if I'm very fast, just take it slow by slow, right? Excuse me. This is the area I want us to focus on so much, right? What did the market do here? The market was first consolidating here, came and respected this resistance level that we marked, right? Now, when the market reacted a bit, it created what? A higher low. We created this higher low. Let me just change the color to blue so that you can be able to see clearly, right? So we had the market, excuse me, let me just clear everything. The market created for us a higher low, then it broke above. Now I'm just going to be illustrated on the side here. The market created a higher low, then it broke above. This is the same thing that's happening here. Higher low, broke above. Higher low, broke above. What do we expect? By the textbook explanation, we expect the market to come back and retest this point. What did the market do? It came back and retested this point. So after retesting this point, what do we expect? The market to continue high after retesting here, right? And this is exactly what the market did. It went and broke up. So we expect the market to break higher if we're continuing with an uptrend. We went up and touched, we made a new high. Now, in the process of making a new high, remember this red line that we marked was in monthly, and we saw that it was a false breakout. We're testing a false breakout. There was a false breakout backwards here. I'll just show you that. Let me just show you this. The false breakout I'm talking about is this. You can see this false breakout here. This one here. You can see this one I'm talking about, right? So I'll just go back. Let me just clear this to make the chart very clean. Right? So that's why the market came and touched here. So we have high, higher low, high, higher low, high, right? Now in that process, we broke above this level here, making a new. So I'm just going to change this to blue so that it can be easy for us to understand. Now the market came, reacted into this area here. Now we are below it. Are we together? Now, when the market was reacting here, it was simplifying that this area is very significant. Now, observe this. The market made high, higher low, high, higher low, high, higher low. Why am I saying this is higher low? Because the market came here and reacted, and buyers showed presence. So what happened? The market made what we call a lower high, right? So the market is now currently below, but the wick is still on. Today, I'm recording this video as the wick is still on. That's why you see this weekly candle is still on. So when the wick closes below this area, there's a high possibility we may be wanting to go back up here before continuing down. But all that will depend on the strength or what we call momentum of the price movement, right? So let's go back to the daily time frame. Remember, we're using 3 time frames to identify the intensity of whatever is happening. Now, when you come down the daily time frame, I'm also going to break down for you everything, starting from how we came. Now, remember we said we had the high here, higher low, high, higher low. But now when you come down the daily time frame, which is heading towards the time frames that we use for our trading, right? What happened? The market created several highs and lows. Are you seeing this? Several highs and lows. So how do you deal with this? This is where the problem is that I want to simplify for you guys today. Now, what has helped us is that the bigger time frames have already identified for us the more significant turning points. So we had this high and we had this high here. Are you together? Now, so what we're going to do is when the market prints a high, prints a low, and prints a high, it means this high gave us this low up to down here and then went up. So we're going to be looking for the high here that gave us the push up to retesting this point here. It's what we're going to be doing here. So in this case, what high gave us that significant push up to down here? it's that in this case, it's going to be this high here. So I'm just going to adjust it here like this. Are you observing? Now, when you adjust it, what do you observe? You observe that the market here pushed the market to come and retest here. That's why I've shifted it from here to here. And also you see the market came and reacted here, not reacting here, right? Then we broke above. So in this case, you're seeing we have a high, higher low, high, higher low, high, right? Then we came back and retested this false breakout that we saw being tested in weekly. Right together? Now, again, when the market broke down aggressively here, what would you expect? The market to come and retest this broken level. You can see this. So this level here, we are done with it. Are we making sense? Now, but remember we have said that as the market was going up, it was printing these levels here. So do we ignore them? No. Also, when the market came down here, why is it stopping here? Now, this is when you saw that I had a trend line. Now, what's the the meaning of a trend line? A trend line is a diagonal support or resistance, whereby we can use it as a conference, but in most cases, we expect buyers or sellers to come from there. It's actually just a support and resistance, but a diagonal one. Are we together? So in a layman's language, or how I like to simplify the definition of a trend line, in my personal understanding, is a trend line is a diagonal form of support and resistance where we expect buyers and sellers to come into the market. Are we together? Diagonal. And the trend line is not fixed. It can move. What do I mean is that it's not fixed. What I mean is that if this is your trend line, and the market bounced off from here, came back, bounced off. When the market starts coming down, that means it's supposed to touch exactly here, right? It can touch here, or it can come and touch here, or it can come and touch here. Are you getting it? So it's not a must that's supposed to touch a specific point, right? So let me just delete this. So I'm just going to put a trend line here. The market made a high, higher low. So I'm just going to put it on all the lows like this, right? So I've spoken about how to draw trend lines, but I will emphasize it. On the first touch point, make sure it's touching the lowest point. On the second touch point, which is very key, make sure it's cutting through as many wicks as possible. Then the third one, you can see it will be accurate. So that's how we draw trend lines. Now, if you saw when we're starting our analysis, I had this. I'm showing exactly how I do my analysis. I don't complicate things. Right? I don't complicate things, and I'm going to we're doing analysis together. This is the same analysis I'm going to use to trade Euro USD. Like I've told you guys, it's on my watch list, right? So we know that the market has touched here, but again, when we look on our left, we had a level here that the market had not tested. These are the levels now we are going to start using. Let me just actually use a slab. So I'm just going to mark a slab here. If you observe, so when the market came down. Remember, we said when I was teaching you guys, I said that every turning point is a structure. So meaning that when the market was going up, it created this high, higher low, high, higher low, high. But out of all these highs here, we identify that this is the high that gave us a retest to this point. So meaning this is the significant high. That's why we first marked the slab here. But that means that also these turning points are not significant. So if you observe, the market broke above this high, came retested it, then we broke down, meaning it's not tested. So the market came back, tested it here, and again tested it here. And again, you can clearly see it's acting as a very crucial point. That's why I spoke about in the other video that it's a very key area. It may touch on this third touch point and react, right? But again, there's a level up above that we have not tested, that we broke and we didn't test. Which level is that? It's this second line here. So I'm just going to mark it like this. Are we together? So meaning that there's a possibility we're expecting price to come back into this area here before either continuing to, remember, ultimate target is this improper retest here in the monthly time frame. I use monthly for my direction. So if you don't use monthly for direction, make sure that you have a time frame that you use for direction, and a time frame for structure, and a time frame for entry. Now, personally, I use monthly for direction, weekly for structure, and then daily I just check if weekly is at the same point. Now, for example, here I'm just using daily to adjust my weekly structure levels that I marked, so that I'm accurate, right? Accurate to my standards or to my personal levels, not the market standards, right? So you have to have a time frame that just is for adjusting your structure markings, and in most cases, the most immediate time frame. Are we together? So in this case, I have my levels already marked. So what is left is for me just to look for entries. Now, the next thing is to determine what type of trade are you, right? And also we have said technical. We have marked our technical. These are our technical markings, right? Then the second one is fundamentals, which I've said that you can check the calendar. We have an economic calendar on Fastbull. You can check news there. So before you take any trade, make sure you go to the website. You check out that, do I have any news? For example, you go to the economic calendar and check, do I have any news that is going to affect my trading? If it is there, do I avoid it, or is it going to give me momentum? Do you think it's in favor? Right. Also, we shall make a video on how to trade fundamentals. So if everything is matching, then you can take your trade. If they're not matching, then or you want to avoid it, you know that, okay, the news at a particular time. So I'm going to wait for the news to get done before I can go. Because during news, usually there's those volatile movements that may affect your account, right? So out of the three types of analysis, make sure at least you're using two, right? If you can use the three, it's okay, but at least make sure you're using two. Do not ignore. I've heard people saying that only technical is enough, or only fundamental is enough. According to my years of trading and the little experience I have in the industry, I really advise that you have at least two, right? So this is my euro marking, right? So personally, my area of interest is this one here. So I'm just going to delete this. I usually like marking and leaving my chart very, very neat. So my area of interest here is this one. I'm just going to remove also this upper one. So this is the only area of interest I'm interested in. If the market can come, this trend line is just going to help me with confluence. Because also remember, we have defined it as a form of resistance that's diagonal, but we expect sellers or buyers to come into that area, right? So I'm going to observe as the week is ending. I'm not expecting to trade again this week, but as the week is ending, I'm going to watch how price is going to approach in this area. But where am I going to be watching it from? I'm going to be watching it from my H4, right? So if the momentum, because what am I going to be watching in? Interested in watching in H4 here, the momentum of how it approaches this side. You can see we had a pattern here. I've just not marked it, but you saw it at the beginning, and also I mentioned it in the previous video. You can see it here. I'll speak about it in the video of patterns and trend lines. See, we have a pattern here, right? We have this pattern here. Just going to mark it. So, but I'm going to be interested in the market, how it's going to come here. If it's approaching in a very weak way, I'll be so much interested in how the market changes trend here. Then I will take my trade. But keeping in mind that also I have this trend line here. So if it can break it and aggressively on a weekly test, I'll be having another entry to be targeting this area. But if the market approaches this level here so aggressively, I'll not trade Euro USD. I'll wait for a structure, my structure, because right now my structure, remember I've told you I use weekly. My structure is telling me that the market reacted here, and then currently we are below. If we close below here, like I've said, I'm not trading again this week. The week closes below here, the structure is bearish. If the week opens or it closes above here, it means that my bias has changed. So I have to wait for the structure to be bullish again, maybe by looking at the momentum to shift towards the bullish side, sorry. And then I can look for buys. But for now, my sentiment and my perspective that I'm looking for are all bearish. So that's what I'm going to be waiting for. If also the momentum in H4 favors me, approaches here in a weak way by trending very weakly towards this level here, or even if they're in touch, or even if it exceeds a bit, what I'm interested now here is as the market is approaching these areas, right? Because we have a lot of turning points here, all these are structures. But it will be so good if it approaches this area here, or it touches into this area. Remember, I've always mentioned that the best trades are when the market touches your area of interest, right? So how it touches this area and how it approaches it is very key. And then I'll be observing change of trend, right? If change of trend happens, then I'll be taking a trade with being cautious of this diagonal support here, all right? And then when it breaks it, I'll be having another entry to help me up to down here, because we saw in the monthly time frame that this area here needs to be properly tested, right? So I'll just show you in monthly. You can see in monthly here, we saw that this area here was tested here by the previous month. This was December 2023, but not a proper retest. So I hope this has helped you to identify which highs, which lows are you supposed to be focusing on. Not every high, not every low is important, especially when you're heading towards your timeframes at these smaller timeframes. You have to make sure that you understand the concept of which high is very key, which high is not. Just a reminder, or what to take away from this is, if the market makes a high, makes a low, makes a high, we're interested in the high that is going to give us that push to touch here. For example, here, the high that gave us the push was this one here, right? So this time we first marked before we marked this one. Now this one here, why I moved it, I just wanted my chart to be clean, but it's because the market tested it here when we broke below. We tested it here a couple of times. So the one that we have not tested is this one here. We need the price to come back, and it's also aligning with the neckline in my structure time frame, which is the weekly time frame. Let me just show you in weekly here. Right, you can see it's just aligning perfectly with my weekly neckline here. You see, when the wick closes below here, this will be like an M. I will show you in the line chart. It will just be like an M, right? So that is it. I hope it makes sense. In case you have any questions, leave it in the comment section. The team will respond to. The team know my response to most of the comments, right? Also, if you have a topic that is confusing you that you want us to look into, you can just tell us in the comment section. And also, if it's your first time coming across our channel, you're welcome. Make sure you subscribe, because we produce such content, or we release such content exactly how we trade on a weekly basis. Have a nice time.